Everybody, and welcome back to the Teaching Tax Flow Podcast, episode 201 today. Welcome, I should say. I feel like I do a little song and dance to the Strategic Associates Studio. That's right. If you don't know who those guys are, check out in the show notes. We can connect you. And we'll leave it at that. But the topic for today, we're switching gears a little bit. We crossed that 200 mark. We're not going to talk about one specific thing. We're going to talk about a whole lot of things. Chris Picciurro, for one, welcome back to your own show, sir. And more importantly, I love seeing you, but I've been on the road with you for a few of these things. It's like our Super Bowl conference season, playoff season, we should say, for a lot of these conferences. And humble brag for you a little bit. I'll do it for you. I don't think we've actually been to one that you haven't spoke at. So why don't we dive into these things and tell people that aren't in that industry, that are going to these conferences, what in the world we even talk about? Sound good?
Feels great to be home in my own bed, number one, with all my teaching tax flow gear in my closet. And it is great to be back on the show. John, you nailed it. We are wrapping up what I call conference season for our profession. So CPAs, enrolled agents, and any other licensed tax professional, just like other professions, are required to earn continuing education credits. And those requirements are pretty substantial. 1 to 2 weeks a year. We need to, even though I've had a CPA license for almost 25 years, I still have to go through continuing education. And because of these continuing education requirements, many tax professionals go to a conference. The conference is something where you have a lot of different options for sessions and learning, but also, and especially I feel like since the pandemic, we appreciate that face-to-face interaction. And this is really important for tax professionals, but it's also important for taxpayers to understand what's going on kind of behind the lines, right? And as I was coming back from Michigan to where I'm at in Franklin, Tennessee, I was thinking, and this is just recently, right, John? I saw you last week. So recap, last week at the Michigan Association of CPAs conference, a small firm practitioners conference. Shout out to Bob Doyle and the absolutely amazing team at the Michigan Association of CPAs. This conference has been going on for, I think it was the 48th year. This is my 20th year going to the conference. I missed one or two, and they skipped one for the pandemic. And then shout out to Taxposium, the National Association of Tax Professionals. That conference moves around as well. So we're going to talk a little bit, John, about what the heck's going on out there in the tax world from the national perspective. We had about, I want to say, over 1,000 attendees. It was in Cleveland this year. So, John, you got to go to both of them, right? It was pretty regional for you.
Yeah,
got to go to
I didn't have to get on a plane.
It's always nice when you don't have to go on a plane. We got to go to Cleveland, and over 1,000 tax professionals. I had the honor of speaking at that conference. And then again, in Michigan, I'm very involved with the association there and got to speak at that conference, which, but it's seeing other tax professionals collaborating. The continuing education is important. But for tax professionals watching or listening, and more importantly, taxpayers, the most valuable part of those conferences occur outside of the sessions, John, right? We've been together a lot, working on finding new implementation partners, which we're going to have some content coming from some new ones we met. So that's at the trade show. The little conversations, grabbing coffee, grabbing lunch, quite frankly, they could be at a slot machine. They could be at a karaoke lounge. We've had those conversations, right? And talking about the industry, talking about clients, and making sure as a CPA myself and part of our private CPA firm that we are leaving every person we talk to or interact with better than we found them. That doesn't necessarily mean they're going to be a client of ours or they want to be a client of ours or we're a good fit, but also understanding for them, and I communicate this as much as I can, what's going on in our industry. So yeah, I'm excited to share some takeaways from both of those conferences. And I know that the Taxposium, which is the NATP, it's going to be in Boston next year. And then the Michigan Association is moving to the west side of the state. So Muskegon, it's going to be near the water. And I know there's a theme park there. So yeah, let's
start networking on the water slides. And And
No
Chris,
one
too,
wants to see me in that unless so that's the thing. I
we'll
gotta
get you one of those bathing suits that gives you like a six pack and it'll give you a big tattoo on your back. So, anybody that's listening to this, right? They're probably like, all right, great. These conferences go on. Sure. Okay. They're for the tax professionals, not the taxpayer. And right, I'm kind of wedged in the middle, right? Like I'm not the tax pro. Obviously, we're filing tax. I have been my whole life, taxpayer life. And one thing too, I don't know if you've ever actually thought about this, Chris, is, at a lot of these, I know you did one presentation on a lot of it's practice management. So those tax and, accounting practices, you're giving tips and I wouldn't say how to's or any of the stuff that sounds kind of boring. You're talking to people really how to better their operations, right? So efficiency is always a big thing. And you hit on technology a lot of the stuff that you guys have been doing for a while and continuing to fine tune. But really why that's super important to the taxpayer or the client customer in this case, right? Is the more efficient that these tax professionals are, the better service that their clients, the taxpayers, getting. So again, I'm kind of in it again in the middle. I love seeing it when people aren't just looking at it like, oh, how do I make more money for my business? The practice or the firm owner. They really do want to help people. And I think one of the biggest things, and tell me if I'm wrong, is a lot of it is bandwidth issues where they can only do so much by, you're helping them with the efficiencies and growing and sort of scaling, I should say, so they can help more and more people, right? And that's really cool to see, at least from my eyeballs. And I see your presentations; they're pretty good.
absolutely. Well, the slides look good. Someone smart did them. And your
Well,
tax. I think
if
I
you did
told
a
you.
crappy job, I'd tell you.
I consider you tax professional adjacent.
Yep, I forgot about that one.
That's
Very true.
well. Here are my top. I have 3 takeaways from these conferences, and again, they really are. The takeaways aren't for tax professionals; they're for the tax community, including tax payers. Before I get into my 3 main takeaways, I want to just throw this out there: the IRS continues to be understaffed, underfunded, has a lot of leadership issues, and extremely challenging to work with. So if you're a taxpayer or tax professional that is trying to resolve a notice, an amended return, it is not uncommon for you to feel like you're falling through the cracks, to feel like you're running in circles or banging your head against the wall. There is a secret bat line called the paid professional line where tax professionals, enrolled agents, as long as you are registered with the IRS and you have what's called a PTIN, meaning a number that identifies you as a tax professional, you're supposed to be able to streamline your communications with the IRS, assuming that you have a power of attorney on file for your client. And even those efforts are being failed right now. So, no, that doesn't sound like the best news. However, it's important to understand because a lot of times you feel like you're in a bubble or in a box and you're trying to communicate with the IRS. They are having big problems. So one of the things we have to think about when we work on tax returns is we've had other episodes on this is making sure we have all the right information and that it's accurate to avoid an IRS tax audit or an IRS notice before it happens. So
And a tax pro can only use the information they're given, right?
absolutely.
You guys
I have a
cannot
lot of
connect the
stories that I
dots that
can't
don't
tell you
exist.
how many times, especially earlier in my career, if I was preparing a tax return, I'd ask someone, well, what were your, donations like last year? And they'd say, I don't know. You tell me. It's like, I don't know. Or they donated all this stuff to Salvation Army. What was this worth? You tell me. No, I don't know. I mean, can you imagine you go into a bank for a mortgage and you say, the loan officer, you say to the loan, hey, tell me what my income is so I can get this loan. That's not how it works, right? So we do need that information. So
I mean, honestly, Chris, as funny as it is, and like all joking aside, you saying some of that reminds me, or I can visually see this, somebody walking in or emailing with their tax pro, thinking like, of course they know I got married and had, triplets. I put it on Facebook. Why don't they know it? It's not like you're looking at everybody's damn Facebook page for all their life events and recording them, right?
right,
So,
right.
so.
It's interesting.
This episode is sponsored by Wealth Builders Mortgage Group, powered by Movement Mortgage, one of the top mortgage teams in the nation and a powerhouse in the real estate investing world. With over $1.1 billion in closed mortgage volume and more than 3,000 investor deals under their belt, they don't just talk the talk, they walk it. Their team specializes in helping short-term and long-term rental investors scale smart with customized lending strategies. They offer all STR loan products, including second home, investment, non-QM, bank statement, asset-based, and HELOCs. They also offer all primary home loan products too. Whether you're just starting out or expanding an existing portfolio, their unique Path of 10 strategy is designed to help you move from a 9-to-5 job to financial independence. If you're looking for a lending partner who truly understands the investor mindset, visit wealthbuildersmortgagegroup.com and start building your roadmap today.
Well, let's talk through my three main takeaways from, again, probably talking to hundreds of tax professionals. The first one is the traditional CPA firm succession model continues to disappear. And we can even move that over to enrolled agency firms as well. So most CPA firms, and I'm talking from the CPA side, are still owned by mature aged operators that are going to continue to struggle. They're going to continue to struggle to recruit, attract, and retain talent. And a lot of times the operating CPA, back in the day, 25 years ago, there was this like, hey, I'm going to sell my practice and I have 8 to 10 buyers willing to pay me a good multiple for it. And that's not the case. Fewer young professionals are willing to buy a book of business, right? Instead of just grow it on their own, because what's happening is when you acquire a book of business, you're also acquiring their legacy processes, pricing, technology, and staff. Now, the staff could be a positive, but it could be a challenge. So that's something
I've heard you say you're also inheriting their problems, right?
You are.
Mhm.
And we were part of a panel discussion on top of this presentation at Taxposium that was extremely popular. I was luckily able to ask two nationally recognized professionals to join me on a panel discussion, and it was amazing. I mean, it could have went on for hours, that whole should I build or should I buy a practice? And what I'm telling you is, if you're working with a tax professional, or if you are a tax professional that is mature age, that you have no succession plan, that is not a good option. Start thinking about that. And if you're a taxpayer, at least start thinking about what's going to happen if Joe or Joanne or Billy or Bobby retire, or, no offense, but die at their desk. I know that sounds morbid, but it happens quite a bit in our industry. It's just one of those things. So succession planning is definitely an issue because we have a lot of people retiring and not enough people coming in. Kind of in that vein, number two, the young professionals are more apt to build their practice than buy. And that is a big decision, like I mentioned before. The main reason is that the younger professionals realize that, and we talk about this all the time, that they can engineer a practice exactly how they want it to run. So as a taxpayer, you might be attracted to a younger professional, one, because you feel like you can have a longer term relationship with them. Two, that you might feel that they're more apt to utilize technology, which includes data security. And you might just be someone that doesn't necessarily want to go into a physical office, put on real clothes, shake hands, sit in a waiting room, maybe drink a coffee and have a little piece of candy, but maybe you do. But there's plenty of people that don't want that experience, and those tax professionals are successful at partnering with those clients. We have a term in our industry that I like to use called evolve or erode. So a lot of times a younger professional, it's easier for them to evolve, and a lot of the more mature age professionals, quite frankly, are not evolving. They're sticking with their processes. And if you're not evolving, you're eroding. I mean, can you imagine if, John, you're a car guy, right? So can you imagine whatever the best pickup truck was in 2010, if they said we're best in class, maybe it was probably a Ram. I don't know. Maybe you'll get all upset about that.
Yeah, I was kind of unloyal in my early 20s with brands, but I don't know.
So let's say a Dodge Ram was the class of every pickup in 2010. If they just said, we're happy, we don't have to make changes, we just keep doing what we're doing, 5 years later, they'd be left behind. And unfortunately, in our industry, that's happening. So my second one is younger professionals increasingly are choosing to build their practice instead of acquire practice. And then the third topic, which we've been heavily involved in these discussions, is that AI remains one of the biggest issues facing our profession, just like every other profession. And this is my opinion, right? But I believe AI continues to dominate conversations along, with CPAs, enrolled agents, and tax professionals. And I've been saying for years that firms that adapt and bring AI responsibly into their practice are going to replace practitioners and firms that don't embrace AI. I don't think AI itself is going to replace tax professionals. It's just firms that embrace, like I said, in a responsible and intentional way, AI will wipe out the ones that don't. So think about war. I know it sounds morbid again, but in you know in the Civil War, which was a terrible war, they didn't have the technology, the drones, the airplanes, the stealth bombers that we have now. So you've got to, so if an army or isn't embracing the new technology responsibly, it's going to get left behind.
Absolutely. Absolutely. And it makes sense, right? And I imagine whether people really stop and think about that, they see this, even if it's somebody that, you're no longer mailing in everything. If I remember right, I mean, here's one example, right, of the IRS doing it with tech, tech as a whole. You can no longer mail in checks, right?
Mhm.
It didn't happen last September or something along
Yeah.
those lines.
Yeah.
So
Yeah.
everything's
IRS
advancing.
trying to go paperless and yeah, I mean, to put a bow on this as we talk about conference season, there's so many conferences, and you could go all summer and go to conferences. I've just, especially with three teenagers in the house, and I try to be extremely intentional about the conferences I attend. But I think that if you're a taxpayer listening to this, it'd be a good question to ask your tax professional what they're doing with their continuing ed opportunities, right? Uh, because yes, it's good to get that technical knowledge, but as you've been on a ton of the speeches and presentations, I'm always going to say we're going to learn. If we're in a group, we're going to learn more from each other than we are from the books or one instructor.
100%. And it's been good to see these events too. It's, seeing a lot of the same people, I think year over year, some of them 2, 3 years now, and they're making changes, within their tax practice too. And I mean, sure, like any other conference, sometimes people get together and all they do is kind of, you know, complain about certain things or, or certain clients. Everybody's the same, right? Regardless of the industry. But it is cool to see how a lot of things are being adapted and then people are really changing. And back to what I was saying at the beginning, right? It's the more the more clients and people that a lot of these firm owners and practitioners can serve, and it's very optimized and efficient, the better it is for everybody, right? Because as you mentioned, it's not like this industry is being flooded with, you know, 100,000 new quote unquote applicants or people getting into the industry. It's slowly declining in some regard, and it's good to see that people are coming into it and they're injecting, frankly, life into it, right?
Absolutely. We've been,
Mhm.
I've really enjoyed some of the newer entrants to the industry and try to seek them out and talk to them as much as I can and continue the
Absolutely.
conversation throughout the year.
Excellent. Well, I appreciate this conversation, man. This was a good fun one. So, alrighty. Well, anybody that's listening to this or watching this, couple things for you now, and I'll give you these in this specific order. Two, for one, look in the show notes. You got some links in there for some resources. Check out that stuff. Defeatingtaxes.com. I'll send you a couple different routes, including direct you to our private Facebook group. But even more importantly than that, on YouTube, whether you're here already or not, be sure to subscribe and then you see the little bell there. Follow everything that we're doing here and get the notifications because really now moving forward, as we've always promised, right? We're getting a little bit more honed in on some topics, but we're also going a little bit more broad with some. So even if this one you don't feel like applied to you 110%, I guarantee that it did. Kind of like your mama always told you, better listen to me now kind of thing. Uh, it's happening whether you like it or not. And I promise it's for the better. So, Chris, you hit some really good points there. What we've kind of seen here, hot in the streets of something that just now your average taxpayer can walk in the door and go to one of these sessions. You got a little insight, but also if anybody has any questions on this stuff, drop it in the comments there on YouTube. Answer every single one of those so it will not go unanswered. And we're happy to reply to it. So check it out, everybody. And until next time, you have a great week. We'll see you back here again next week on the Teaching Tax Flow podcast.
The information in this podcast is educational and general in nature. It reflects the opinions of Teaching Tax Flow and does not take into consideration the viewer's personal circumstances. It is not intended to be a substitute for individualized financial, legal, or tax advice. Consult the appropriate qualified professional prior to making any decisions. Securities are offered and supervised through Cabin Securities Inc. member, FINRA, SIPC. Investment advisory services are offered and supervised through Cabin Advisors LLC, an SEC registered investment advisor. Chris Picciurro is a registered representative of Cabin Securities and an investment advisor representative with Cabin Advisors LLC. Teaching Tax Flow is an independent entity and is not affiliated with Cabin Securities or Cabin Advisors.